phase here, it's built up with certain things happening in real time on the charts from that line onwards. And when we look at what happened up here, you can see what happened. The offers started to pour in, but it wasn't just the fact that offers started to pour in, it was the lack of new bids that came in behind here. See how there was bids getting added here for a while? There was bids getting added here. Well, that's going to offset the offers here. Think about it from a fair value perspective. What happens if I add offers and pull away the bids? What happens to fair value, guys, without price moving? I'll give you an example. Let's do an example. Let's do a class example of what happens with liquidity order flow. Imagine you're moving into the oil inventory release. Imagine you're moving into the oil inventory release, right? And this is the price. That's the price. You look at the longer term order book. There's your offers. And there's your bids. Well, we could probably all agree that price is approximately at fair value. Yeah? So the price trades along this area here and everything's looking good. Everything's looking good. And then we get to the release itself. And we say, okay, well, how's the market going to go? And just as we get to the release, those offers pull away and they go down here. And those bids pull away and they go down there. And the offers come in here or come in here. Just before the release, the offers move into that location there. Well, that's those kind of situations that happen every now and then, isn't it? One of those kind of situations. Fair value's just actually dropped down to here, hasn't it? As a result, if I am looking at the charts, one of the key things I'm now going to be looking for is the opportunity to sell that oil price. Sell that oil price. So this is something we can recognize when we're looking at the depth of market, can we? So if I'm looking at this chart here, I can see where the offers and the bids are by what's being added. So I can see that those bids are being added at this price and the offers are being added at this price. When the price rallies, the offers get put into this price area here. Now, some of them get taken away, but that's okay. It's not bothering me that. There's still offers at that price. But where's the bids? Where are the bids? Well, they've disappeared, haven't they? The bids have disappeared, making this a higher probability short trade than it was before, simply because with the bids disappearing, and I don't see any new real big active trades. Obviously, we can set the size up so that we can take in, commercial size rather than any other size. So when that happens, we get this asymmetrical response, and we can see offers getting played here, which is just above the actual price, offers getting played here again, offers again here, offers again here, offers again here, offers again here. Well, if the offers are right on the price, guess what, guys? The price is just going to keep moving towards a fair value. It's going to keep moving. And when the offers get pulled and then the bids come in, the price can double back against those trade narratives. And when that happens, of course, the order book at the bottom changes from sell side to buy side. When the bids come back in at the lower prices, we move into a buy side book. We can start to recognize the opportunity to liquidate at that stage on the trade. So we can see this happening, can't we? We can see these ideas evolving in real time by watching these little candles changing in these areas here, but obviously these are hard to interpret. This is far easier to interpret. But to interpret this, you've got to understand it, haven't you? To interpret it, you've got to know what it means to interpret it. You've got to be able to look at that and say, right, there's bids coming in behind the price, or perhaps absorbing the price as price drops. If those bids move out, that's probably going to be a top edge. And if I can get a high at that stage, I should be able to make money by selling into that price. And sure enough, if you manage to sell into that, you never got a high price at that stage, but the offers started to pour in behind that, and the price collapsed from that point onwards. Order book transitions, absolutely. Order book transitions. And if you can get in early enough when you see the order book transitioning, then obviously it helps significantly with your supply-demand equations. Because if I'm looking for the trade, well, obviously it's easier to spot the trade and it's easier to transact the trade. It's easier to get the business done if I'm actually actively looking. That's why we put you on bid watch or offer watch, to make you start looking for that bit of business at that stage. But obviously you've got to try and do that bid watch yourself. You've got to try and find areas that you're going to be pursuing that liquidity, that transitional liquidity. You can't be relying on a tweet. You've got to be out there looking for yourself and saying, right, I am on bid watch. I want to make sure I don't miss that opportunity to make some cash.